All right, welcome. In today's assessment, we're going to be going over deferrals and accruals. Specifically, we're going to be going over accruals and accrual revenue and why I believe it to be the most important out of all the adjustable entries methods. The thing let's do is go over each adjustable entry. Those are going to be deferred expenses, deferred revenues, accrued expenses, and accrued revenues. Choosing accrued revenue for my most important of the four is because one small miscalculation can lead to catastrophic problems long term, whether that being legal troubles that companies will get into when one company is claiming a payment while the other, if they did not register this transaction, could easily just not happen. That could lead to sues down the line, any type of legal action. And that's why we must do our best to record every transaction between companies, whether paid or unpaid, just to verify the transactions did happen, whether it's going to be in the asset or liability or equity columns of our accounting formula. So the reason, or another reason why I chose accruable revenue is because this is where a lot of ethical issues can come up. It would be easy to cook the books and simply make money disappear if you do not put in the entire amount that is supposed to be given to your company for a service. You could easily pocket the money. That's why we must do our best to be vigilant, check the numbers, and process any transaction that comes down the line, and make sure all the numbers get where they need to be, and do a complete overhaul every year. Now that we've gone into the what's and the whys, let's dig deeper into the style of accounting we were doing. There are two main styles. There's going to be the cash basis, and then there's going to be the accrual basis. An example from the book about accrual basis accounting. Well, let's move to this first example here. And it's going to be an example where we are being paid $600 to take care of a product. Now, two different varying transactions here. We have our main cash transaction, which we're going to be paid the lump sum in April to cover a certain amount of time frame of over the course of the year and taking care of a product for somebody, or in case of or in the example of the book, we are a consulting firm and we are being consultants on a project and they're just paying us a lump sum for our consulting. Now, if we're doing an accrual type transaction, this $600 is going to be spread over the time period we are taking place in, which is going to be from May all the way to October. Each month we're going to have to keep track of the different transactions stating that we are being paid on that month $100 for our service. Now, the reason we want to do this is mainly because if we do not track it per month on an accrual basis, we're going to lose track in the books of where the $600 is coming from in our accounts receivable and where it is going. So now let's move on to another example here. Let's say that we were contracted by another company to do some services for us, consulting services. Let's go ahead and get started with our little lines here. Dates. And we'll do our accounting formula now. Which is going to be assets equals liability plus equity. So let's say that the end of the year rolls around. We're seeing that we are owed some money, and we'll say it's this 31st of December. And we are owed $800 for some services we have rendered to other companies. So how we're going to mark that up is going to be under accounts receivable. It's going to be for $800. And then over here, we are going to be having our service revenue. Also $800. So one is going to be for our actual service that we have rendered for them. So this is for a pay service that we have earned, we have done. And then for account receivable, that is going to be money that we are legally able to actually acquire from the company when time comes. So now let's move down the track, further down the timeline here. So January 1st rolls around and we send out our bill. We're wanting our money for what the services we have rendered. So what do we do? During this time period, what are we going to put here? Answer is simply going to be nothing. So during this whole time frame, there are no transactions taking place. All we've done is we know that we've done a service. We know that we have it on our books for the services rendered, the accounts receivable. January 1st, we've sent out our bill to them, so no transactions are actually taking place during this time. So let's say the company we've consulted for, January 15th rolls around, and they send us the cash. They're paying us for our services. So under accounts receivable, we will have our cash coming in for $800. And now we need to make note in our actual time frame here that under accounts receivable, we need to take away that money because we are receiving it. And we need to make a note that this is going to come out of our accounts receivable, and boom, the transaction is complete. So you can see the time frame here when it comes down to actually our transaction of we are rendering our revenue here from the occurrences, sending out our bill, all the way to our receiving of our cash, and that's going to be our cycle of life when it comes to our money. So, in terms of what levels of management we're going to be using these types of formulas and indeed accruing revenue, so it's going to be across all levels, whether it be low to mid to high. The numbers are going to be what are changing greatly here. Lower level, you're looking at minimal $500 here for like office supplies. Higher level, CEO level, that's where you're going to see the millions of dollars going. You're going to have to be keeping track of every single transaction to a T, and then really it's all going to be the same bread and butter, normal accounting principles after that. So to close things out, let's give a few moments to our Lord and Savior. And I found the verse, Psalms 37:21, to ring very well when it comes to this assignment and what it really means. And that reads, "The wicked borrows but does not pay back, but the righteous is glorious and gives." And to this assignment, that's what it's all about, is making sure, especially with accrued revenues, that we are not only doing the service we are providing for people, but also are receiving what is owed to us in